Yeah, I mean, look, on the first of the year, I think Bitcoin was trading in the 30,000 range, maybe 40,000. I forecasted 80,000 at some point this year. Yeah, 100,000 would certainly not be out of the question this year.
What's up, crypto crew, and welcome back. Or if this is your first time, I'm Captain Crypto Mite, actively escaping the matrix, scoping out the crypto ocean. So if you like your odds, get on the boat, stay up to date, thumbs up, and join the hunt.
Into the boat!
So the Bitcoin halving has just taken place. The question is, what does the Bitcoin halving event mean for you, crypto crew? Here to give us some insights is Nic Carter, co-founder of Castle Island Ventures, which is an early-stage venture capital firm exclusively focused on public blockchains, in a conversation with Kitco news anchor Michelle Makori.
Historically, halving events have been bullish for Bitcoin, but what can we expect this time? So, Nic, what are your expectations?
Yeah, look, I have a different view from many Bitcoiners. Most people see the halving as a very bullish event because it represents a reduction in the issuance of new Bitcoin. Previous halvings were much more significant. Of course, every time the issuance rate is cut in half. So each time we have a halving, it's less influential on the supply side. The other thing is, of course, everyone knows that the halving is occurring. Not to claim that markets are perfectly efficient or anything, but clearly there's a market expectation of the halving occurring. It doesn't represent an informational shock in any sense. And my expectation is, frankly, it being more of a sell the news style event. Of course, there's other variables that could affect the price of Bitcoin at that time. But to the extent we isolate the halving itself, I think it's going to have a pretty minimal positive effect on Bitcoin, and most likely to be negative. Actually, the only thing I would envision would be Bitcoin miners going out of business, because the halving, it doesn't necessarily have their revenues, but it certainly decreases them materially. And if we do see consolidation and insolvencies among Bitcoin miners, which I think is very possible, they may have to sell some of their Bitcoins that are held in their treasuries, which is similar to what we saw in 2022. A lot of Bitcoin miners went out of business, had to sell their coins. That also put pressure on the price. Yeah, and I don't think the excitement around the halving is that warranted, frankly. But yeah, at the end of the day, I don't think it's the most important factor that affects the price of Bitcoin. I'm much more interested in the demand side as opposed to the supply side. I think the ETF flows are far, far more important, much more material. Those are larger than the net effect from the halving. The macro conditions, aggregate liquidity, where rates are, what the 10-year is doing, those are the things that I think really, really matter for the price of Bitcoin.
All three previous Bitcoin halvings have proven Bitcoin price reaching all-time high levels, as well as historic bull runs. This time, however, the Bitcoin price reached its all-time high months before the Bitcoin halving, suggesting this Bitcoin halving event is different from the three previous Bitcoin halving events.
But Nic, one could say, well, demand on the other side, of course, is supply. So if we're getting more demand from the ETFs and the supply is diminished, then, surely that means the price will go up.
Well, the supply is largely unchanged. We're just talking about a reduction in the issuance rate by 90 basis points per year. So look, if we were talking about the halving back in 2013 or 2012 perhaps, or the early halvings when you're talking about massive, massive swings in the new issuance by miners, yeah, like it certainly mattered. Now each successive halving is only reducing issuance by a small amount. So I don't think it changes the supply dynamics that much.
We don't know how much and when Bitcoin touches its new all-time high. We don't know when the Bitcoin dominance will happen, nor do we know when altcoin season starts. It is important to understand, crypto crew, that demand is what makes the Bitcoin price go up.
Basically, the market realizes that the halving isn't the most bullish event in the world, and people realize that the halving didn't, materialize anything particularly exciting. I could be wrong, of course, but that's what I expect. In the following 3 to 6 months, I would look at the miners and see how they're doing and see if they're teetering on the brink of insolvency. Potentially that could add more downside pressure to the price. But yeah, as I said, I think it's demand side factors that really are the most important for me.
Right, but going into 2024, you said we'll easily hit 80,000 for Bitcoin. I believe that was one of your calls. So are you seeing 80,000? Do you have, even with this pullback, or are you seeing, what's your price target now, I guess, for the end of 2024?
Yeah, I mean, look, on the first of the year, I think Bitcoin was trading in the 30,000 range, maybe 40,000. I forecasted 80,000 at some point this year. Yeah, 100,000 would certainly not be out of the question this year.
So if history repeats itself, not only will we see Bitcoin reaching a new all-time high, 80,000 USD, as Nic Carter predicted, maybe even 100,000 USD per Bitcoin, but also major increases in all of the crypto ocean.
As we look forward in the next 2-3 years, I'm very, very constructive on the price. I think the Bitcoin thesis has been validated. I think it really got that institutional nod of appeal. Bitcoin has really set itself apart from the rest of the crypto economy. There's other positive factors like the emergence of new layer 2 networks on Bitcoin, which are very exciting and allow for it to reach maybe technological parity with Ethereum. So if the Bitcoin network itself is sort of being upgraded in real time. And then the fundamental here is, there is a debt crisis on the horizon for the developed nations, in particular the US. And I think we will face monetary repression. We will face, yield curve control, high and variable inflation, and people will look for safe havens in other asset classes. Bitcoin has now been ratified as an asset class in its own right, with efficient tools to access it for anybody that wants to in the US. And so that fundamental trend is unchanged, regardless of sort of short-term eddies relating to the halving.
Now that the Bitcoin halving event is done, if the crypto history indeed repeats itself, we will not see direct effect of this Bitcoin halving until 6 to 8 months down the line.
Bitcoin does need to show some technological dynamism. And over the last few years, there's been this real regressive phenomenon in Bitcoin where people have been trying to ossify the system and are skeptical of anyone trying to build anything interesting with Bitcoin. Meanwhile, the crypto economy has blossomed. DeFi, decentralized finance, has taken off on other blockchains. People have begun using other blockchains for much more interesting use cases. And that hasn't happened on Bitcoin. And so, part of the reason the protocol is very limited, it's not very programmable. Now, what is changing is there are new layer 2 networks being built on Bitcoin that would allow individuals, programmers, to create systems known as rollups, which is the dominant scaling method for Ethereum, for instance. So these are just ways to create overlaying payment networks, transactional networks that settle debt back down to Bitcoin and that allow for more transactional flexibility, more scalability, more programmability. So basically building structures on top of Bitcoin that allow for a broader set of transactional use cases. Yeah, I don't think we can rest on our laurels and just assume that we're going to win. We need to continue to push the envelope technologically. We're seeing the collapse of sovereign currencies, with the dollar being the last one to collapse. And so I think those are all, strong and ongoing trends. One thing that I am excited about is the emergence of these new layer 2 networks on Bitcoin, which is a key fundamental change. I've dedicated my career to the asset class, to Bitcoin. I don't see that changing anytime soon. So, post ETF, I think there's no doubt remaining that Bitcoin is a mainline asset class. It's something valid that is being folded into the financial system writ large, and isn't going anywhere. And I only see it going from strength to strength.
What is clear, crypto crew, is that we need to prepare now. Unless you've landed on a 50, 100, or 1000x coin, setting yourself up to be an altcoin or meme coin millionaire overnight, you do have to do your due diligence. Study the market. Understand the entire crypto ocean to spot your opportunities. Fix your mind before you get to the grind.
Well, that hit the spot.
And remember what the Word of God says in 1 Timothy chapter 6, verse 10. The love of money is the root of all evil. Do not focus on money. Do not focus on the love of money, but focus on getting things done by making the most out of this crypto market for yourselves. And with that said, let's continue to escape the matrix. Let's continue to be on the lookout on this crypto ocean, growing grace, and let's make some crypto waves. Say I.